The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, to you in the Northern Hemisphere. Welcome to this rescheduled tutorial, and a late good morning to our friends in Australia and New Zealand who are with us today also. How's the sound here? Yes, Terry says it's good, everything's good, and I'm delighted that you're able to make it with us today. Now, of course, this is the rescheduled webinar that was scheduled for last week, and we had to defer it because of the threat of a cyclone in Queensland. It was Cyclone Marcia, and was supposed to be a Category 5. It was certainly a fearsome storm, and it came ashore about 600, 700 kilometres north of where I am at the Gold Coast. And really created some dreadful carnage for people in Yeppoon and Rockhampton and that North Queensland area. So I thought to go out to them today. It's a terrible, terrible sight what Mother Nature can do. Anyway, moving on, as Marcia did, by the time she got down here, it was just a rain depression, and we had 16 inches of rain in pretty much 2.5 days. So that was a bit fun, but damp, and we're grateful that we didn't get the high winds or anything more savage. But I didn't have any confidence I'd be able to do that webinar in the middle of a possible much more serious event. So that's why we deferred it, and I'm happy to pick it up now. Folks, today I'm going to talk to you about a remarkable character called Jesse Livermore, who is a heroic and famous and very dramatic trader of stocks, which is all they had in those days. This is 1907 to 1932, covering the Great Depression and the 1909 stock market crash and the First World War, of course, equally dramatic times, maybe more so. And tell you about Jesse and a bit about his life story. In many ways, it's a morality play, as well as a most interesting story about trading. We're going to get to that in just a few seconds as we move along here. But the first thing I have to tell you, excuse me, this is the preliminary notice of our next tutorial. Hello, David. How are you, mate? This is our next tutorial, folks. It's not quite set in stone yet, but just about. So I'm letting you know early so you don't make any alternate travel plans. It's going to be the 5th to the 8th of May. And how our tutorials work is on they usually start on a Tuesday evening with a cocktail party where everyone gets to say hello and get to know your fellow attendees, and then we have teaching most of the day Wednesday and Thursday, and half day on Friday. And the tutorial ends usually, formal part of it ends at 2 o'clock on Friday. And what we do at these tutorials is we teach you pretty much everything I know about trading, and the most important part, of course, is the basics of trading from daily charts. That's your basic skill. You must have that. And it sounds easy, but it's complex, and you need to know all about it. I'll also teach you forecasting with the 4th and 5th seal. I'll teach you the time cycles. I'll teach you anything I know. And, of course, we'll be spending 3 days, and the nights together, we usually eat together as a group. I'll take you out to a dinner somewhere fancy on one evening at least, but we usually eat together and party together. Plenty of party goes on, and you can ask me anything you like. So it's a chance for us to be able to spend 3 days together This is where it's going to be. This is the Hilton Garden Inn at El Segundo in Los Angeles. We've been there before. We've done a tutorial there before. And I liked it a great deal. The reason I like it, it's a nice place, as you can see, like all the Hiltons are. But it's smaller than, the mega hotels, which sort of frightened me a bit. This is about the right size. It's literally 12, maybe 14 minutes from the airport, and they've got a very dedicated Dave. Yes, let me just make a note. Dave has no sound. Let me see if I can reply to him. Yes, Dave. So I think I've done that all right. I never quite know with this. Let's see. Anyway, yes, okay, everyone else, Max got sound, Dave, everyone's got sound. A guy called Dave Mahane hasn't got sound. Where were we? So, yeah, El Segundo. They've got a terrific service. The hotel minibus will be at the airport to pick you up. They'll take you to the airport. They'll take you back to the airport when this is over. In the meantime, they'll run you around town, take you anywhere you want to go. We've got it calls itself El Segundo. Locals know more about this than me, but it's actually at a suburb called Manhattan Beach. And this is the beautiful Manhattan Beach, which is kind of interesting. Jerry likes it. It's a bit, I don't know, I'd call it a bit trendy and hippie. And, Jerry Winter, our broker, is a very, he can't hear me, Terry. Excuse this three-way conversation. We're trying to get Dave up. Do they have a Manny Steakhouse, Dave? I don't know. They have everything. Manhattan Beach, look, it's my recollection is it's maybe a 5 or 6 minute cab ride, maybe less, 3 or 4 minutes. You can walk there, certainly. And it is a really cool place. There's some great bars. There's 100 restaurants. It's very trendy. Right with it, as you'd expect on a beach right near the heart of Los Angeles. It's a fabulous place. And we had a great time there. One of the nice things I like about this place, it's got a very nice outdoor dining and bar area, as well as the indoor facilities, which are normal at the Hilton. It is just a great place. So put those dates in your diary, folks. Now remember, we don't do these tutorials very often. The last one was at Waiheke Beach, New Zealand in December 2013. So if you're thinking of coming to a tutorial, make sure you get to this one because we don't do them very often at all. I just have no idea when the next one would be. So if you want to come to a tutorial, please don't write and ask when the next one is, because I have no idea when or where or how. This is the one that's on the schedule at the moment. So clear your diaries. I hope I'm going to just see a whole lot of you together. We have great fun. I think the informal parts are better than the teaching even, because you can ask me any question you like and I promise to answer it to you. So you can get hold of 40 or 50 years experience of life, trading, and the other activities that go with it. Let's move on now about trials. On Monday I got an email from a few people who were doing FracZen trials or trading FracZen, saying they'd had pretty significant drawdowns, and I have to tell you, that's right, we did. And when did the drawdown start? Well, pretty well the day we released it. It's Murphy's Law. Whatever can go wrong will. As Murphy's Law goes on to say, that which will hurt you most will happen first. But trials are not to give you any feeling about the profitability or otherwise of a system. We simply don't know that, and we can't forecast the future profitability. We agree with the statement that the exchanges require you to make, that past performance is no guarantee of future profitability, but that's in fact the way everything works. FracZen in particular, this applies to all trials, but FracZen in particular, it's a very volatile system. Drawdowns happen, profits happen, and the trials are not there for you to make an assessment about profitability or downside risk. Now, I've said this to you on a number of occasions, but there are some of you who don't seem to be hearing it. Trials are simply provided to make you familiar with the product, so you can see it, get a mental image of it, and understand how it works and not be scared about it. So then we had a large drawdown, and usually about the time I start getting emails about drawdowns is time to double your stake, because you're going to run into a series of big profits. And in fact, for the last 3 days, the FRACSN, the 8 markets we've released, have returned $7,000 in profits. So it's gone from running below trend with the drawdowns to now running at about $2,300 a day, which is close to $70,000 a month if it continues, which it won't, because how markets work with trading programs is they oscillate. That is, they move about above the median and below the median, and at the end of it we finish up with the median. But there is no such thing as a product that doesn't have drawdowns. It's particularly unfortunate if you get hit with a drawdown when you're in the early stages of a program or a trial, which is why when people give you examples in trading courses advertised on the web and this sort of stuff, they always pick a nice starting point. And the reality is that drawdowns can happen any time, and there's nothing we can do about that. It's called reality. So the message in trading is don't let your highs be too high, don't let your lows be too low, as I'm always telling my children. And right now, or very shortly, we're going to see a great example of that with the life of Jesse Livermore. Incidentally, I have got the full printout of these results that I'm talking about for the last 3 days trading. Terry was kind enough to send them to me this morning, so I'll be able to show you those FRACSN results. This is a housekeeping matter here about being aware of rollovers. As you know, I post the rollovers on the website telling you when they're going to happen. This is T-bonds today, and you can see the difference between the March contract, which has just expired, and the June contract, which became the front month today. And I mean, it's tremendous. This thing is jumped from 146 to 161 something, and you could have been aware of that because I'll come back to you, Rodney. I've got your question. It's actually a $50,000 account. I'll come back to all these questions at the end, guys, but I know some of you ask questions and then you're not here at the end of the webinar. This webinar is recorded, and we will post it as soon as we can when it's completed and been rendered and what have you. So yeah, be aware of rollovers. That's just a housekeeping matter. You can see at the bottom of this chart, those of you who have Trade Navigator, that here's the spotlight, where that red dot is now. If I move it, you'll see there's the letter R for rollover in blue in a diamond. That's Trade Navigator's forecast of when the rollover is likely to occur. And rollover, from a practical point of view, happens when volume, the major volume, shifts from the ending month to the future month. And once volume becomes dominant in the next month, that is the time that it's treated as a rollover. Now, that's not strictly the legal time. You have to be out of the old contract. You've got sometimes 12, 14 days until the old contract expires. So if you're in that trade in the old contract, don't panic. You can stay in it for quite a while. But your broker will not allow you to put on a new trade in the old contract once it's rolled over. So that's the significance of rollover. It's just a housekeeping matter that I talk about all the time. Just let me, I'm trying to help Dave here, a different Dave. excuse me, folks, won't you? I'm just typing a message to one of our guys who's having a problem with sound. See if we can get him to talk to Terry, who might be able to help him. I've asked him to email you, Terry. He can't hear me, so there's no point in me telling him what to do. Okay, so let's move on, and let's have a look at this. I hope you'll find a very interesting topic that we have today. Here's our compliance statement, folks. I am required by law to show you this, and I really do suggest that you read it and pay attention to it. This is plastered all over our website, and everyone who is involved in trading or teaching or brokerage, what have you, will drive you mad with these compliance statements. But they are important and they are real. There are very large risks involved in trading, and if you're not a good trader, you're going to get whacked. And as Jesse Livermore is going to show you, even if you are a very good trader, the odds are you're going to get whacked, because here is our guest of honor today, and this is Jesse Lawrence. I think it's Lawrence. Jesse Livermore. Let's have a look. His full name was Jesse Lauriston Livermore, and he was called Laurie, although he's always referred to as Jesse Livermore in publications. And there was a book written about him, which is most of what we know about him, as well as a book he wrote himself, and a lot of newspaper coverages. This guy, the book about him was called Reminiscences of a Stock Operator by Edwin Lefebvre, who was a Chicago journalist of the time. This guy was a genuine big time trader. Unlike Gann and others, where the testimonials are largely self-created, this guy, Jesse, or Laurie as he called himself, or was known, was the biggest and undoubtedly the best trader of his time. Now remember, he was trading stocks in those days. There were no futures markets available. He was a stock trader, and he had a number of very interesting features about him. As you can see from the photo, he was obviously quite a character. He's a very dapper guy. He's sitting in a restaurant or club setting, starched shirt, starched cufflinks, gold cufflinks in the cuffs. Pretty serious guy, and got his cigar there. He's a man like our friend Shift, who enjoys a cigar, and some of the rest of you too, I know. But he's a person of individual of some quality. His parents were farming folk, and he got interested in stocks very early in his life, and worked his way up through the system. He was called variously the Boy Plunger, or the Great Bear of Wall Street. Let me move to the next, and here's something about his early trading experience. He became famous after the panic of 1907. He's really famed for being a short seller, which is, I guess, what made the headlines of the day, but was obviously a magnificent trader as well as a devilish risk taker. The media around him, depending on what version of it you're reading, lauds him as a great trader and gives you his rules and gives you his quotes. He was politically quoted by the press. Time magazine had him as the man of the year, I think. Certainly was on the cover of Time magazine as the greatest trader of his time. But he's remembered for these enormous bear market trades in the crash of 1907, the panic, and then the 1929 crash. So he had a huge year in 1907, and then he lost almost all that money on a blown cotton trade, which he got on a tip from someone else. So, I mean, a lot of this stuff's got a common theme. The sort of things I talk about all the time. Don't listen to other people. Don't believe what you read in the newspapers. Journalists don't actually know anything about trading. What they're trying to do is take the information that's already happened and fit it to some current news, and tell you that that's why markets did this and why markets did that. And it's not true, quite simply. It's their job to present the news in a form that the great unwashed will The collar reminds me of Gand. That was the style of the day, stand-up white collar. Uh, Pretty cool. But that, don't listen to other people. They don't know. It was one of Jesse's rules, and of course, like most of us, he had his rules and he didn't always stick to them, and he got into an enormous cotton trade that he got on a tip from a cotton broker, and soon after, about 1912, he was declared bankrupt. So that was the first fortune gone. That didn't stop him, however. He just continued trading, and this is the part I admire about him. Without any great market moves, this is between 1907 and 1929, he regained his fortune, repaid all of his creditors. So that was a staggering achievement in my view. This was the great days. I've headed this slide. He lived the good life. He owned a series of mansions with plenty of servants, a fleet of limos, and a steel-hulled yacht for trips to Europe. Okay, so we're talking about him taking himself, his family, and his friends from the east coast, I guess, of America to Europe. And anything that's big enough to get across the Atlantic in comfort is a very, very decent-sized yacht. It isn't something you're going to see around your local marinas. Anyway, his other great weakness, of course, was that he was a pretty keen guy for the ladies, as some of them are. He's not alone with that view of life. And he married his second wife, Dorothy. She was a Ziegfeld Follies showgirl. Now, I don't know if any of you guys have had the opportunity to see the Ziegfeld Follies girls, but boy, oh boy, they are something. He was 41, she was 18, which sounds about the right age split for me. And I keep telling my 18-year-old son, who's a university student, and at that stage when girls are a matter of great interest, I keep telling him, your future wife is probably not far out of nappies these days, so don't get too involved with who you're with now, because anyway, those of you who come to the tutorial, I'll give you my philosophy on marriage and horse racing and anything else you like as well. Anyway, so Jesse was a man who liked ladies, nothing wrong with that. And this was his second wife. And then came his great coup in the 1929, the Wall Street crash. And Jesse pretty well cleaned up the lot. This is what really made his reputation as the greatest of short sellers, the great bear of Wall Street. And he was alleged to be worth $100 million at the end of that trading episode. Brian, futures market in 1800, blown cotton traded in the future. Brian thinks that you were right, there were futures markets. Jesse didn't trade them. He was a stock operator, Brian, but yeah, there was certainly a fairly active cotton market there. I've got some letters from about this period written by Safariel to Gann, W.D. Gann. I've got an original letter about the cotton trading stuff. Anyway, moving on with our story. So by the end of the stock market crash of the Great Depression, Jesse had it all, the lot, and those were certainly the great days. Shortly after that, about 4 years, or two years perhaps after that, Dorothy, his beautiful showgirl wife, ran off with her much younger lover, which I guess is always a problem, a pleasure or a blessing, depending on your view of these things. When I was actually practicing as an attorney, we had a very big divorce practice, mainly handled by my partners, but I was certainly had my share of running divorce actions for clients. And you'd often get the call at 1 or 2 o'clock in the morning from a client saying, "My wife has left me," and I used to say, "How fortunate you are! Great, they leave and you don't have to evict them." But anyway, that was usually not well received because most people see that as a bad thing. But Jesse obviously was pretty well prepared for this because she divorced him in March 1933, and he was married again 4 or 5 months later. And he married a lady called Harriet Noble, and it was her 5th marriage. This would be going on now. The next one, this is going to be Laurie's 3rd marriage. Her 5th had the great distinction that all 4 of her previous husbands had committed suicide. And regrettably, Jesse was no different. And by 1934, This is just 4 years after he was certainly one of the richest men possibly in the whole of the United States. He was again bankrupt, and he was suspended as a member of the Chicago Board of Trade. He'd lost it all. He became bankrupt again, second time in his life, and at the end of November 1940, Jesse shot and killed himself. He left a note for his wife, which was in a leather-bound notebook. Journalists, of course, will want to know what was in it, the police said it's addressed to his wife, which was quite proper. Basically, he'd had enough. He said dealings were no good, things had been bad for him. I'm tired of fighting, can't carry on any longer, this is the only way out. And of course, one of the more interesting but somber footnotes to all of this is that even though he was bankrupt, he did leave trusts that weren't affected by his bankruptcy for his children, totaling over $5 million, which was a magnificent fortune in those days. So there was the story of the ups and downs of Jesse Livermore, and it's interesting that he's quoted so often in trading books and people who are interested in trading. Look, it's a good read, the book, get it. It's available everywhere. Edwin Lefebvre, Reminiscences of a Stock Operator. And there've been, there's a heap of people who piggyback on this. There are books like, Trade Like Jesse Livermore and Jesse, the world's greatest stock trader. People make money about writing about this this guy, but you won't learn anything from that. I'm about to show you exactly how he traded, and it's not terribly relevant in these days anymore. These are some of his more famous quotes, which you can see up here. The one I like in particular is the game of speculation is the most uniformly fascinating game in the world. But it's not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. And, of course, the sad thing about this whole story is after his magnificent successes and surely having reached a stage in life where he had enough money for everything and anything, Jesse died broke, which shows you that he didn't have much common sense. It's much debated that he suffered from lifelong clinical depression. My daughter, who's just graduated from Bond University at the Gold Coast with first-class honours in psychology, really gets into those things and expounds on them, but the reality is, how would you know? It's just speculation. He was obviously a very unhappy man at the time of his death, but my guess is he was also a very happy man when things were going okay. In other words, he was a human being like the rest of us. So we're going to move on now, folks, and have a look at Jesse's trading system. And it was pretty simple. The main thing is, first of all, remember that Jesse didn't have any of this, the comforts that we have of charts and automatic downloads of data. He observed numbers trading. He was actually on the Chicago Board of Trade floor, and he watched the markets. He had this little leather-bound notebook where he wrote down what he called important numbers, and those important numbers were old highs and old lows, and where he saw support and resistance forming. So we start off here. We're going to look at the last bit of a fun crash we had, which was October 2007 to March 2009, and if you don't think that was fun, you're obviously not trading right, because I thought it was fantastic. I find before I found the Danielcode, I was a mad bear. I always thought everything, including markets, were overpriced and overvalued, and they just had to crash because it was all so stupid. When I found the Danielcode, that changed everything I had thought about markets. But I still think the same about the world today. I mean, the price of real estate is ridiculous. The price of food is ridiculous. The price of petrol down in our part of the world, which is about $8 something a gallon to convert it into American money. I mean, it's crazy. We've got hidden taxes and sales taxes on everything. The prices of everything are just ridiculous. And honestly, I mean, I don't know how long it can go on, but I've been saying that for probably 30 years, and it pretty much does go on with a few short and sharp corrections. But I'm really looking forward to the next market correction, because this sort of endless grinding, upward grinding action. I mean, it's pretty simple to trade, but it is boring. I really enjoyed the 2009 crash. It was exciting and had a bit of adrenaline and a bit of whoopee about it. But anyway, this is the S&P chart. I've used the index. Jesse, of course, was trading large, high-value stocks. There's some funny comments coming in here. So he wrote down these important numbers that he observed from being on the trading floor. And they tended to be, of course, old highs and old lows. So the chart we're seeing here, we've got the 2007 high right up at the top of the chart, and you got two lots of numbers in blue, 1370 and 1363, which were the two pretty important lows before the ultimate high. Now, this is a 3-day chart. For those of you who want to, do this sort of trading, you do need something more than the daily chart. You can use a 3-day chart, you can use a 6-day chart. The problem you then have is that your risk, your stops get very, very big. But when you see the size of Jesse's stops, you'll understand what a great plunger he was. Apart from being called the Great Bear of Wall Street, he was always also called the Boy Plunger. I don't know if any of this is real. I mean, this is what newspapers of the time say, and we know how reliable those are. But so this is what he did. So first of all, he'd write down the important numbers. He'd keep these numbers in his notebook because he didn't have charts of this sort. The next thing he'd do is find the trend. And pretty interestingly, he didn't like to ever say there was a bull market or a bear market, which were the fashionable terms of the day, because he said that locks you into an idea of bias. What he talked about is an upward sloping trend and a downward sloping trend. So he would just say the market is sloping upwards or sloping downwards. And you can see with our Danielcode trading channel, which is on this chart, it's pretty easy to find this downward sloping market, which was pretty apparent well before the break for the real crash part of the market, which really started to get dramatic after April '08. So that was his second step. His third step was to then find a rally. So once he'd found the important numbers, he's talking about, he called them pivots, and since then the pivot point system as a trading system has been introduced. It has absolutely nothing to do with Jesse Livermore, but it was a good way of taking some of his ideas and trying to make something commercial out of them, which is what a lot of people do. So they would be, he'd call them the pivots. They're really just old highs and old lows. And once he'd seen a break of that, and he thought that there was a trend in place, he'd then look for the rally. And here's the rally, which ran from about February. Well, this is our market. I'm giving you how Jesse's trading based on the 2009, 2007 to 2009 U.S. stock market crash. There we find the rally. And what he did then is he would look for the pivot point. That is the old numbers he had written down. In the case, you can see that had been about 1270 where those old lows were. Excuse me. He'd look for those to be broken, and he'd sell on a break below that number, which is kind of interesting. I was having a talk to Brian in UK, one of our members, the other day on Skype. As I've told you the last webinar, any of you people would like to talk to me on Skype, or you'd like a private conference, I'm happy to do that. Just send Terry an email and he'll set it up. But I was talking to Brian, who's a bloke who's been trading for a very long time. He's worked in banks and he's worked in financial markets. And he was always taught, like most of those guys, to sell the highs and buy the lows. In other words, you're selling against momentum. and it's very, very good if you can hit it just right, but the reality is as a win percentage, it's very, very poor. And you know, he was sort of quite amazed that we'd sell of a break of support. In other words, we'd sell below a daily low rather than selling at the previous day's high. But it's the momentum, which is always for us the last piece of the puzzle, that tells you that what we think is happening is actually right, and it is happening. So Jesse did the same thing. He'd sell just below a break of his support. And then his last important numbers, as he calls them, which presumably was the old swing high, that became the failure point. In other words, that's where his stops were now. He being a stock trader, he have this spread over a number of markets, and he certainly added to markets. He added to losing positions as well, which is what really sent him broke. You should never do that, folks. Never, ever add to a losing position. You know, you understand how to trade markets, understand how to trade from a daily chart. That is the most important part of trading. That's what I'm going to be spending an awful lot of time teaching you at the tutorial. If you get that part right, all the rest will fall into place. All the stuff about forecasting highs and lows and forecasting time cycles, all of that is very, very interesting, but none of that works unless you've mastered the art of trading from a daily chart. And that's how, you know, our blue lines, our TO3s, all those signals. I'll show you how to create those for yourselves. And once you have that, you have it forever. And that's the basic rules about where your stop goes, about managing your risk, and the things that Jesse forgot. So although he was no doubt one of the greatest and certainly one of the most flamboyant traders, spectacular traders of all time, he didn't keep the money, which is the greatest failure. Successful trading really is the basis that once you have an edge or a percentage over the market, the longer you trade, the more money you make. You've just got to work through it's like a golf shot. You see a pro golfer when they go out on the practice range, they're not trying to hit the ball as far as they can. They're taking out, say, a number 6 or 7 club, and they might hit 100 balls, and they're looking for those balls to all be clustered in a reasonably small area. In fact, they're trying to hit the same shot all the time. Now, I don't know whether you play golf or not. I used to play it all the time when my father was alive because he was a keen golfer and wanted me to play golf with him, but I haven't played since he died. I think it's a boring game myself, too slow for me. But there's the thing that you're trying to do with your trading. You're trying to effect the same shot all the time. You're trying to have the same trade without emotion, without fear or favor, as we say in the legal business. And that's what Jesse didn't have, and he finished up broken dead. But anyway, there's his entry. That's how he traded. It's pretty simple. And then his big thing, of course, is once you're in right, sit tight. And there are all sorts of quotes attributed to Jesse saying, "It was never my trading that made the money, it was the sitting." And he called this sort of trading, he called it the long pull, meaning you were in for the long pull. It's a rowing euphemism when you, nowadays when you had a small rowboat and you had to row out to your super yacht, as Jesse obviously did. There was a long row to get out there usually. I'm sure Jesse didn't do much of it. He had a crew for that, but it was still a long pull to get out there. So he's right, and you know, in times where you have these super trends, he captured them. He did magnificently well. But the fact that he'd been bankrupt twice, lost his fortune twice, shows you that he was a man of poor judgment, and that this type of trading doesn't work unless there are very strong and sustainable trends going on, as opposed to which I will teach you how to make money in all markets, no matter what they're doing. Some are better than others, but that's what happens in trading. So do recommend you get the book, Edward Lefevre, Lefevre, Reminiscences of a Stock Operator. It's only a little book, but it's a good read, and I think if you're really interested in trading, Jesse, or Laurie as he calls himself, Laurie Livermore, is certainly one of the great characters of trading, one of the great giants of trading, and like lots of giants, he was felled and failed to keep on to his fortune. So our purpose of trading, remember folks, always is not to be right, it's to make money. And Jesse, having amassed that fortune, just shouldn't have given it back. So, that's just a morality story for trading. If you are doing well and your account's running up and up and up, don't go on pyramiding indefinitely. There must be a point where you say, okay, that's fine, I'm going to put that into the bank or the children's trust account or whatever else and start a new account. And that's a much safer way to handle your trading. If you become a good trader through the Danielcode, you will know that the markets are always there for you. We can always make money trading. It's not going to run away and leave you. I want to turn now a little bit to these important numbers. Jesse Livermore was a numbers man. It doesn't mean you have to know anything about mathematics. We show you most of it. But I am more than anything intrigued with these Danielcode numbers and these charts. And since I first invented the Danielcode, quite a large number of years ago now, I have been fascinated by these charts, and I still am. And I wonder how many of you really look at these charts or think about what they're saying to you. This is a chart from the Russell that was in the update done on Wednesday night. And I'm going to show you a lot more of these as well, but just have a look at this highlight bar, this red one here. So look at this series of blue lines here. The first one was 12:30.08, and we go to this bar here, which I guess is going to be, let me bring that chart up. TF is our friend here. That's going to be that outside bar there in grey. That's last Friday, the 20th. That's this bar here, the 20th. So it runs up, just pokes its head through the blue line, turns around and pulls back. The next day, up it goes again. This is now Monday of this week. And it pokes through the blue line, and then it turns around and closes right at the blue line. The close of that bar is 12:32.70. So it's closed there right on that. There's actually another number in there that's not on this chart. Yes, it's 12:32.50. I've gone to the next day. You'll have to excuse me. That bar we're looking at there with the highlight on it is Monday the 23rd, with a close at 12:30.90. In other words, 12:30.9. This market trades in tenths, as Jimmy down at Coffs Harbour knows, and so it closed 1 tick or 1/10 away from the Danielcode blue line. Next day, as we move on, the market moved up, punched through 2 blue lines, turned around and closed at the 12:32.50 line. Next day, it opened just below the 12:32.50 line, closed at the 12:33.40 line. So you've got 4 days in a row where you've got recognition of these Danielcode numbers. Now that doesn't mean the market is going to turn. I can tell you that markets can't turn ever without being at a Danielcode number. And if you'd like to take the time to verify that, you can go to our chart archives. There's a link on the website. Be very patient when you open it, because there's about 33,000 charts in there now. All the charts I've created for members since 2007 or thereabouts. Might have been 2008, I forget, but it will take maybe 3 or 4 or even 5 minutes to open because it's such a massive file. And you can go through 30,000 charts, and you will be you'll have to look really hard to find a market that's ever turned anywhere other than at a Danielcode number. So we start off with the proposition that markets won't turn at every Danielcode number, obviously, and they need other characteristics to set up a market turn. but we do have and can prove the proposition that markets will not turn unless they have recognized a Danielcode number. Now, they can do that two ways. They can do that by the high of the bar or the low of the bar if it's going down, or on the close. Both are valid. So we start with this extraordinary proposition backed up by 30-odd thousand charts, where we know that markets will not turn, they cannot turn, unless they've made recognition at a Danielcode number. And this applies to both the blue lines and also our red and black line retracement. And I'm going to run through a series of charts really quickly with you when this is over. Pete's telling me, thanks Pete, the book is free. You can find it on Google. Just Google Livermore. You're looking for Livermore, the PDF, and apparently it's available there. Thanks for that, Pete. I'll go through all of this stuff with all the questions when we finish here. So we have this incredible proposition that markets will not turn. They cannot turn because Danielcode is the DNA of markets. Now, if we start with that proposition that markets won't turn unless they've made target recognition a Danielcode number, what flows from that? Everything. That's the whole basis of the Danielcode, the numbers. Everything else that we do, creating the signals, finding the time cycles, doing the forecasting, that all flows from this one basic important point, and I don't think many of you are really spending the time looking at the charts. I have to tell you, I have to find a way to create more charts. I used to do 70 charts a week. I now do 40, and the time involved to do them is immense. They're not just colored lines. They all have to be backed up with spreadsheets. There's all sorts of other work that has to go on with them. But find those markets that we're covering where the Danielcode numbers are on the website and updated twice a week. You can learn so much by doing nothing else. If you just sat and did nothing but look at Danielcode numbers for the next year of your life, it would be the most profitable thing you've ever done. So these are important numbers, and there are not many important numbers in trading. So, you don't have to get yourself concerned about that. This is a chart here. This next chart we've just switched to of soybeans is, again, the Danielcode blue lines, and I'm showing you what happens, what the market does when the punters get it wrong. And sometimes they do. This happens to be a chart of soybeans, and you can see that on the last Tuesday is the big bar. This is Tuesday's bar up here. It roared up and it pushed its way through the Danielcode blue line. What did it do the next day? Look at this little inside bar. Doesn't mean it's going to turn, but it's about target recognition. And look, it put an inside bar. Where was the high? Exactly at 1042.20, where the Danielcode blue line is. I'm getting dyslexic. 1024.20. The high of that bar, 1024.20. The Danielcode blue line that it had just violated ran away from it with fright. The next bar, it stuck its high right there. It's telling you that it is tracking and recognizing these secret numbers. Then, of course, we had another day up on Thursday, and in fact, the market's up a bit more now today, Friday. But it's this fatal attraction that markets have to these numbers. That is the basis of everything at the Danielcode. And if you can get to understand all of that, you will be way ahead of 99% of traders in the world. And people don't. I don't get any inquiries about that. People don't take the time to think about these charts, to really contemplate what are they telling us and what can we do with those numbers. What is going to flow from here? And we haven't got to the bottom of that. I've been doing this stuff for, I suppose, 35, 40 years now, and I've had the Danielcode in one form or another, probably for, 20 years or so. And I still haven't worked out that if the mathematics of this thing are so precise, what more can we learn from? Excuse me for a moment. My mistake, folks. Obviously forgot to turn off the ringer on the telephone, so I do apologize for that. Okay, so here is just a little example of showing you the way markets talk to you, the way that if you know what these numbers are, and they're published on the website for a good number of our markets, it's telling you what is controlling the market, and you see this again and again and again, and I'm going to show you some of those. Our final chart for today, we've got a lot more to go, but in this PowerPoint at least, this is the chart of T-bonds. I showed you earlier what happened on the rollover, how the June contract is just gapped into space. That's called a forwardation. That means the next contract is at a higher price than the existing contract. And forwardation is the normal situation for markets. It's often called a contango, and it means that the price of this same product in the future month is higher than it is in the present month. The near one's called the near contract, or the front month, and the next one's called the next contract or the future contract. And a contango, or a forwardation if you like, where the future markets are at a higher price, is a normal situation for markets. The reverse of that is backwardation, where in the forward months the contract price is lower than where the market is trading now. And Shift is a great expert on that. We have a friend of his. Am I saying Jesse had the Danielcode? No, I'm not saying that at all. I invented the Danielcode, David, many years after Jesse was dead. I don't know where you got that from. I'm saying that if Jesse had the Danielcode, he'd have held on to his 100 million for sure. But Shift is a great one for the backwardation, and we often have a chuckle about a famous economics professor who came out in print and said gold was in a backwardation. He was so excited, he'd obviously just discovered what a backwardation was, and said this means that gold will never ever trade at a profit again. And of course, it's all absolute rubbish. Okay, so the important numbers, the only important numbers on charts, are the Danielcode numbers and old highs and old lows. And the old highs and old lows were Jesse's pivot. So here's a chart, a Forex chart. We haven't been spending enough time on Forex. But have a look at this. Here's I'm going to run through a whole heap of charts really quickly with you in a moment. GBP, JPY, bang. Blue lines, red lines, Danielcode numbers, they are like maggots. In this particular market here, you can see that this bar here ran up to the red lines, ran away from it. Next day, what happens? Back up again, closed on the blue line. This is extreme precision. That's how precise these charts are. And they're extraordinary, and nobody is more surprised by all of this than I am, because they are one of the few things in trading that are really, really precise. They should be thought about, contemplated. What else can we learn from this? And my suggestion is we can learn a great deal more. Folks, here's our final page for the PowerPoint part of the presentation. Free trials, what you'll need. Just go to the Danielcode website. You can register for free. There's a big button there. Any problems, any help you need, Terry is at support@thedanielcode.com. He's a hell of a nice guy. He's got a very sore back today. He's got a sciatic problem, poor bugger. But anyway, he's there ready to help you if you need him. Okay, let's get rid of the PowerPoint and just give me 1 minute. If you would indulge me, we've only got about 5 minutes to go. Thanks, David. You've had a bit to do with them. I want to run through with you these charts. I think that they're, excuse me, quite extraordinary. These are, let's start with Forex. These are, for those of you who are not members and don't look at the charts, this is what you get every, excuse me, this is what you get every Wednesday night and on the weekends. These charts are updated. Just have a look at these charts and just contemplate how these markets keep going to these Danielcode numbers. Now, I've been publishing these charts for years and years and years, and a lot of our members with us have been members since the very early days. We have any number of people who can verify that these charts are there. They go straight from the posting into the chart archives. You can see every one of them you're so inclined. But I want you to contemplate why and how do markets keep going to these Danielcode numbers. That's Aussie USD. Look at it, bang, straight into the blue line. This was as at Wednesday night. I know markets have moved on from then. There'll be new charts on the weekend. Here's CAD Chief. The close exactly on the blue line, maybe 1 or 2 ticks away. Let's move on. Here's the next market. Euro JPY. One glance at this chart, you can see that it's lost momentum. It's just consolidating. And then it'll move one way or the other. In fact, as I recall, it had a decent move down today as it's going down to that 133.14 area to test it again. Let's move on down. I don't want to waste your time. I just want you to look and observe. Euro USD, this market is consolidating between those Danielcode numbers. What happened today? Big move down. And not enough momentum to hold that rally, and it's heading down here now. It's actually through the red line, heading towards the black line at 111.45. Euro USD, was that Turkey? Where are we next? Moving on. Just glance, just get it. Okay, GBP JPY, I've showed you this chart. Bang into the red line, supported the resistance of the blue line, closes on the blue line. Here's GBP USD, bang straight into the Danielcode blue line. Here's GBP USD, bang straight into the Danielcode blue line. Now, I haven't picked these markets to show you how well they're observing these numbers. These are the markets that we cover all the time. These are in the website twice a week. Here's USD CAD. Going down, trying to find support. Where's it going to find support? Well, you will see that it's made a key reversal bar today with a low just above this red line here. Keep moving on. I think we've probably got one more to show you. USD JPY, same thing, down the Danielcode retracement. Let's get rid of this Turkey and let's show you futures really quickly. I mean, I just can't tell you how exciting I find this stuff. You may say I have a boring life to find it exciting, but it is extraordinary the way markets just keep running to these numbers again and again and again and again. Okay, so here's crude oil. Here's DX, US dollar index. Here's the ENS making ES, this is the S&P E-mini, making a premature turn. You can see it hadn't got to the blue line, so that's you would expect that it's not going to be a major turn there. Here's gold. It broke through the blue line. It was sort of wandering around a bit, but it did enough to give us a buy signal in gold, a TO3 buy signal on Tuesday, which was elected very nicely on Wednesday. So we've had a couple of little up bars in gold, just a rally so far. This is the DAX, big German DAX, great big European index, into the red, into the blue line. Didn't quite get there, got a bit more to do. Here's copper, straight into the blue line. Now this market's actually rolled over today. Excuse me. I'm pretty sure this is a rollover today. Yes, it is. Copper is now rolled to the May contract. This is the March contract, will be the new May contract, which you'll see on the weekend when I update the charts. Here is silver, which also was on rollover. This is soybeans. I'm sorry, this is the contract we talked about before. This is sugar. Have a look at this. Straight to the blue line. Great deal of precision. Sets it up. Look where the stochastic is. If you have your Danielcode set up done properly, you should have this what we call the slow stochastic, 1433. You'll have a fast stochastic, a 533, and you'll also have a momentum indicator that I've created, which was showing massive divergence, and that is why we had a a buy signal for sugar. We in fact had a blue line buy signal in sugar for execution Tuesday, Wednesday and Thursday, and you should see that that's about to bite, so it probably needs to be carried forward to today because it's making the turn now. But look at that precision. That was the low for this move. Doesn't mean it's the final low. Don't read more into these things than they are. Here's the end of the March contract in silver. And here's the Russell, which we've talked about already. And here's T-bonds, which same thing. This is the end of the contract, but I'm just trying to show you the precision with which these markets turn. It is the most important part of trading, understanding that markets are controlled by the Danielcode. It's an extraordinary thing to say, but of course it's the least exciting part of trading for most people. They don't put in the time or work to understand this. I suggest there's a great deal there that we could learn. Okay, folks, we've gone an hour. I don't want to keep you too long. I'm going to, I said I'd show you the trading results for, here we are. This is Forex Pro for the last 3 days of this week. Here's every trade in the 8 markets we've released. As you can see, it wanders along doing its thing, some pluses, some minuses. Occasionally you get some decent trades. There's copper, $1,300. Here's the biggest loss, which is RBOB, that's gasoline. You go along a bit further, pluses and minuses, a big trade in oil. $6,279, 176 in open equity. Those figures aren't quite right because the starting calculation up here is always wrong because of the way the program treats open orders. But in fact, it's $7,000 in 3 days in Forex Pro. So it's now, having had a period of underperforming, it's now outperforming, overperforming. And it did 74 trades in 3 days. So this is a very intense, highly structured, highly levered product. The drawdowns are savage and the profits are, as you can see, savage also. If you're on the wrong side of them, you're dead. Just wanted you to see that. That's how markets work. Typically, underperformance will be followed by overperformance because at the end of the day, what do we as traders get? We get the median. And as long as the median's in profit and somewhere near our projected targets, then we're happy. But there we are. You can see there's every trade in there for the last 3 days. A beauty in gasoline, a very nice trade in copper, and a pretty nice trade in oil. They look like the biggies there. There's another decent trade in copper. And a big trade in sugar. $400 is a big trade in sugar because it's a very small, very small market. Okay, folks, let me close that down and let me go through your questions. And thank you for staying with us so long. Here's Shift. The Huffington Post believes that Professor Antal E. Fakiti, this is our guy who thought backwardation in gold will mean that gold will never have a profitable trade again or never. What he said was absolute nonsense. He's going to run against Hillary and become the Democratic Party's presidential nominee. That would be absolutely for sure. Shift. I mean, what a funny thing this is. I mean, this is a guy that, gave a presentation on gold trading in Canberra, and allegedly 30,000 people turned up to see him, which is just a joke. Okay, let's get through your questions really quickly, folks. Thanks for staying with us. Dave Mahoney has had a problem with the sound. We know that. Everyone else is good. Yeah, blah, blah, blah. Let's move on here. David doesn't think he'd marry a chick that all 4 of her previous husbands committed suicide. I guess it was a bit of a risk, wasn't it, eh? Okay. How does this strategy work for us today? David, look, I'm telling you because it's of historic interest, and it was a strategy that worked back in the day on stocks that are, in my view, slow-moving and boring. It has nothing to do with us. We apart from some of the basics that I keep telling you about, risk management, handling your trades in a proper way, it has nothing really to do with us. It's just of historic interest, really. But historic interest is good. I mean, we should know these things. David's confused. I don't know why you're confused. I'm not saying Jesse had the Danielcode. I invented the Danielcode, but long after Jesse was dead, and old as I am, I wasn't even born when Jesse put a bullet through his head. Right, how is Sage and Mustang? Pretty good. We were due to have a chat today, but I'll talk to him, I guess, on the weekend. What's a good place to get margin requirements? Mac, go to the CME website. That's a great place to do it. If you want a shorter cut than that, you can go to Gain Capital website. They publish their margins as well. They are sometimes a few $100s different to the CME margins, but they're the margins that most of the major trading platforms require. Gain, G-A-I-N, Capital. Okay, David, sugar, flowers increased, everything's increased. Ridiculous, isn't it? What's the cost of a tutorial in May? Excuse me, Mike, $7,500. It has been for the last 3 years or so. I guess we can keep it at that. And we hope we're going to see a lot of you there. So do make a note of when we're going to be having this tutorial. It's not quite set in stone yet, but my guess is we'll finalize all those arrangements in the next week. And I do hope I'm going to see a lot of you there. So folks, thank you for your attendance with us today. It's been great having you. I apologize that this was delayed, this tutorial. As it turned out, I probably could have done the tutorial. We still had internet and power and stuff. It was a bit of a fizzer-marsher by the time it got here, but anyway, we were trying to be prudent in the meantime. And I look forward to seeing you at our next tutorial, which I guess will be next week. If we can do that, it'll be great. Thank you for your attendance. And it's Friday down under. That means the weekend's coming up. It's well past midday here, so it's time for Bloody Marys. I know you guys are still got Friday's trading to go, but you can put on your orders and have a drink. Thank you for your attendance. I'll see you soon. Bye-bye.